Hey everybody, what's up? It's Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. I want to take a different tack today because I really feel like I want to apologize in a way, because the point of this show is about personal finance, investing, and making you better, making you be better with your money. Okay. That's why the show is called Be the Boss of Your Money. I want to share with you education tips that I've learned along the way to help you be better with your money. And I have a lot of experience at this, but you have to keep in mind, or I should keep in mind, that the goal is not to pump anybody up on the live stream. And I do, what I want to say is this: I create these shows on the fly. I have a full-time job. I wish I was a full-time YouTuber, but I'm not. Really, I have a full-time job. And at about 4:15 or so, I put my notes together. I, drink some water, drink a cup of coffee, and I hit the go live button. I have to turn on the cameras, the lights, the mixer, the key, the switcher, the soundboard, the mixer. There's a whole bunch of things that go into this show. And I really do my best to bring you a quality show, a quality experience every single time I hit the live button, every Monday through Thursday at 4:30 p.m. But when I put up a thumbnail like this, stocks and crypto plunge, that was basically earlier in the day. Really, because I try to announce the show, what the topic is about, when I'm going live, around between 2 and 3 o'clock every single day. And that's really what things looked like. But instead of saying stocks and crypto plunge, what I really should have said is, hey, plunge or not, we're going to be okay. And here's why: because of the things that we've been doing consistently, because of smart asset money management, because of smart personal finance habits, because we are prepared by investing within our risk tolerance, based on our time horizon, based on our financial goals. And then we work backwards and we figure out the plan. That would have been a much better thumbnail to put up. So I really just want to say the goal here is to not put up something that pumps you up to watch what we're doing so that you go, oh my, I have to see that show. That is really the opposite of what I should be doing. So from now on, I will be more careful with my thumbnails, regardless of what's happening. And I just wanted to share that with you. I take my responsibility as a broadcaster and as a financial advisor very seriously. And I do realize that people watching the show take me seriously, and that I could maybe use some hyperbole in order to help create some good viewership for the live stream. And I really do need to be more careful. So on that note, I want to apologize to you and let you know that I hear you, at least I hear you and myself loud and clear, and I'll do better. Thank you for joining me. I'm Mitch Goldberg. If you have any questions, hit me up in the comments of the live stream. If you're watching this in the replay, I would love to hear your questions. I would love to read your questions as well. So go ahead and ask me anything you want, as if you were watching this in the replay. I see some people already out there. I thank you very much. Let's roll a quick introduction. We're going to have a really good show, and I think it'll be very interesting. And if I did have to start with a new thumbnail, by the way, I would have just said, just a ho-hum day if you didn't look at the stock market until the close, which is really the most important thing of the day. Here we go. Thank you very much. We are back. I see a few of you out there already. Cecilia, Frank, I see you. Thank you very much. I will be getting to all of your questions, but in order to save time and maximize the value that I can bring to you, I actually just want to make sure I get to the heart of the matter and share with you the things that you need to know so that you don't get stuck seeing a thumbnail picture in somebody's YouTube, Facebook, or LinkedIn timeline that says stocks and crypto plunge. It's the end of the world, and you better watch my show or you're going to lose all your money, go broke, and be very, very sad. So let's get back to the main show and talk about some of the things that are really most important. We're going to do a quick share screen, and here we are. I'm going to make this a lot bigger because you're probably watching this on a smartphone. 250% enlargement. Okay. Bada boom, bada bing. The Dow only down 164 points after being down over 500 points. And it really did seem like the bottom was falling out, didn't it? Not a lot. By the way, if you are, some of you are clients of mine who are watching this, some of you are prospects, some of you are viewers, and I love all of you. Thank you. I don't really do a whole hell of a lot different on big up days or big down days because it's the little things that you do every day that keeps you in good standing, that keeps you in shape. I don't like to make sudden big reactions when all hell is breaking loose because judgment in times of stress is usually not as good as in times of calm. So I don't really do a lot because I do everything I can to make what I do as boring as possible. I should call this the boring show. Don't you say that, okay? It's not the boring show, okay? So let's still go on. The NASDAQ was barely off, which would have been the worst part of the day. I hope this is being seen by you. Looks like we're having a technical difficulty, so I will just, for the most part, be skipping the share screen. NASDAQ was off about 4 points. No big deal. S&P was off a measly 12 points, only 0.25%. This was about as boring and ho-hum of a day. And if you had just tuned in right now to look at the stock market, you wouldn't even know what kind of day it was. The 10-year treasury yield was up a wee bit up, not even 3.5 basis points. The VIX was up a little bit. It came down a lot. It was only up about 0.84 or 22. What I've been saying all along is the VIX needs to stay 20 or below for a calm market. We go over 20, we have a lot of turbulence. That's what I said a few weeks ago. It happened. Now I'm looking for between 20 and 25. We hit 25, market goes south. We hit 20 or below, market gets back to its winning ways. That's the way I see it. Crypto. You know something? Crypto took it on the chin today. Bitcoin down 10%. But when it was down 30%, you really had something to worry about if you're a crypto investor. But as Bill Miller, who's one of the most famous investors in the world, and Mike Novogratz, these are major hedge fund players who are very, very pumped up on cryptocurrency. This is just volatility. In the last few years, Bitcoin has had at least a dozen or so 30% plus drawdowns, and each time it has recovered. So who am I to say that Bitcoin plunged and it's down and out? And I never do that, by the way. I've been talking about crypto and specifically Bitcoin and Dogecoin since the very beginning of this show. And I always say, I don't knock you if you want to try those and take a shot. I just want to make sure that you are doing it with money that you can afford to lose. You have the risk tolerance and the risk wherewithal, the self-awareness to take that kind of risk. That's all it is. But in the meantime, if you bought Bitcoin earlier this year or last year, you're still way up in it and you really don't have anything to complain about. But Bitcoin tanked a little bit today, down 10%. It is a very volatile instrument. So that's where we go with that. So let's move on to Dogecoin. Dogecoin is a little different. I look at Dogecoin more as a toy. It's down to 35 cents, down about 25% today. And it's really not the kind of thing that institutional investors want to run into. If you're an institution, if you're a big company and you want to put some crypto on your balance sheet, what's the first thing you're going to buy? That's right, Bitcoin. What's the second thing that you're going to buy? Ether on the Ethereum network. And that's what institutional investors are looking at when it comes to Bitcoin. There may be Litecoin and there's a few others that they'll get into. But overall, Bitcoin is Bitcoin. It doesn't really spill over so much into the stock market and the rest of the economy, as big as the market for crypto is. But it does give you an indication that the hot money, the speculative money, the day trading money is definitely confused, not down and out, but definitely down. And people are trying to figure out what has changed with the reopening. If the reopening is here and interest rates could possibly go up and the Federal Reserve could pull back on its monetary stimulus, then that means the more speculative assets have less appeal. The pandemic type work from home, stay at home stocks have less appeal. Plus their earnings decelerate, could still have growth, but not as good as it was before. And people move into the reopening, get back to work, get back to school stocks. And that's where money is going to now. And I do think that in a lot of ways, a lot of those stocks are overvalued too, which kind of leaves us in no man's land. If you can't buy the work from home, stay at home pandemic stocks, and a lot of the cyclical, economically sensitive stocks are up maybe too much, and they've already factored in a booming economy, which we do expect to moderate over the next 9 to 12 months, then maybe those are getting too high as well. So it's really getting hard to find places to make money. And I do think that certain assets like stable assets, cash equivalents, do hold a lot of appeal, even though the interest that they pay is next to nothing. That's okay if your goal is preservation, not necessarily passive income. So let's see if we have the screen back. We don't. I'm sorry about that. Let's go back to me over here. We're on screen one. The big news of the day today is this. The Fed said it would consider pulling back on its easy money policies. We've been talking about this constantly. It's in a battle between the Fed has said, we're going to hold off. We're going to not ease back on our quantitative easing. The Fed buys $80 billion of treasuries every month, $40 billion of mortgage bonds every month. The size of the Fed's balance sheet is $8 trillion, up from $4 trillion since the pandemic started. Just to give you an idea, it was $800 billion before the Great Recession, went up to about $4.5 trillion, came down to about $4 trillion. Now it's up to $8 trillion. Maybe it goes to $12 trillion. Who knows? But I can tell you this. The Fed has said we will telegraph well in advance if we are thinking about pulling back on our easy monetary policy, because we know that it's going to knock the market and the economy and market participants pretty hard. So we want to be as gentle as possible and take it easy. They've already started talking it up, and that was before the latest inflation numbers came out, which were way higher than expected. Okay, so that's the big worry of the market. Why did the market recover? I think there's a few reasons why the market recovered. First of all, long-term interest rates rose a little bit, but they didn't rise that much. So they're still being tamped down by the Fed. Secondly, a lot of market participants are looking at assets, especially the more speculative NASDAQ type stocks, the pandemic stocks that we talk about all the time, from the Zooms to the Teladocs to the DocuSigns. We talk about the same stocks every single day. What happens? These stocks are down so much that they're starting to attract some buying orders. That's basically what happened. So players came in. It looks like the selling has exhausted itself on very heavy volume at the open of trading. People started nibbling, and once stocks started to recover a little bit, the sellers went away and buyers started to come in. It was still a generally down day, but nothing terrible, nothing dramatic like it was this morning. And the same thing happened with crypto. And people who feel they missed the boat, by the time crypto got down, let's say Bitcoin got down to about 30,000, buyers came out of the woodwork and sent it way up. And that's really what happened, up from its bottom from 30,000 to 38,000. I mean, if you bought Bitcoin this morning at 30 and sold it at 38, that's basically a good year in one day. So let's get to some of the questions out here. Frank is out there. Thank you so much, Frank. You are amazing, Mitch. Thank you. Thank you very much, sir. I'm looking forward to seeing you, by the way, on Friday morning. You're a good friend, and I really appreciate that. We've got a question from Seal. Coinbase. What do I think of Coinbase? I think Coinbase is basically your publicly traded stock to play the crypto mania, the crypto craze, or just a crypto investment. Maybe I shouldn't call it a mania or a craze. However, I do think, again, that it is speculative, the crypto deal, but Coinbase is merely a way to play crypto with a stock. So it's a listed stock that you could buy and sell until your heart's content. And as crypto goes up, Coinbase goes up. As crypto goes down, Coinbase goes down. And of course, the last thing is a little bit of a rant here. One of the reasons Bitcoin went up was because Tesla put $1.5 billion into it to accept Bitcoin for payment for cars. It went up to about $2 billion, maybe even more, a little bit more. And then it helped Tesla clear a really solid a really solid earnings quarter. And then it went down a little bit. And then Musk says, you know what? It's such a pollutant, to mine it. It takes up so much energy. Basically, every day the world uses up more power than the country of Argentina. I have no idea how much power Argentina uses, but it sounds like it's a lot. So he says, now we're not going to accept it. It plunges all of the cryptos, and that's where we are today. And then he says, over the weekend, somebody said, it looks like he sold it. And he said, indeed. But then he comes back and says, no, we didn't sell it. It kind of sounded more like we're not selling anymore. And he comes out today with diamond hands in a tweet. Do you know what diamond hands means? Diamond hands when you're diamond holding a stock. It means, or a crypto, you're a holder of it. You're not selling it no matter what. You are strong hands. You own the crypto. You're not selling it, as opposed to paper hands, which means you're trading it at the slightest amount of bad news. You're a seller and you don't want any part of it. You're very fickle. You're weak hands. So he says he's diamond handing, hodling crypto, Bitcoin specifically. And that's really when he said that with the tweet, that Bitcoin turned around and went up. That was the spark that literally turned around crypto. And I'm going to give him credit for turning around the whole market, although he did knock the whole market down as well with his tweets. And I have a problem with that when somebody with that kind of clout, that kind of a following, moves markets and doesn't really understand what he's doing to the people who are buying and selling and possibly losing a lot of money in these assets. It's just a pet peeve of mine. And I know that I have to be very careful and very responsible with what I say to you, like I said in the beginning of this show. And I think that goes for anybody with a large following. Take somebody responsible like Warren Buffett. That's all for today. I thank you all for watching. I'll be back tomorrow. I know this was a quick show, but I do have people to see, places to be, things to see, places to go, people to see, something to that effect. I have to go. I'll see you tomorrow. Please join me, and we're going to have a really good show tomorrow. All right. Sayonara.